We'll start the discussion portion of this now, and I might open up with a question to the commissioner. I mean, we heard two very different perspectives here, fundamentally on whether the ETS is broken. On one hand, is the price the result of flaws that were built into the ETS upon its design, or is the price merely reflective of an economic crisis that is affecting all portions of our economy? But there is one point of agreement on these two sides, which is that the backloading proposal alone can't raise the price to what it should be. I wanted to ask the commissioner if backloading is just a first step, and if it alone isn't enough to raise the price to the level you would want it to be, why is it so important to do it? And for the first part of the question, the second part of the question, are there just fundamental flaws in the way the ETS was designed that have to be fixed, or are the long-term solutions more adjusting to the crisis and adjusting to current situations?
First, why is the backloading? I agree that is not enough in itself, and I think nobody believes that. But when we took this discussion to the ministers last year in April, it was very clear, and I have to say at that time, all member states at that meeting said, please come forward with something on backloading. Already there we knew there would be different positions to the more structural things, the discussion of moving the targets, taking permanent away, setting aside allowances, all this. That is one much more challenging discussion politically. And that was after that debate with the environment ministers of Europe in April last year that we sort of said and concluded in that meeting, okay, so first we will come with the backloading thing. And that is now. Why? Because the auctioning phase goes from 2013 to 2020. So the market wants to sort of know what can we count on. And that is why we have been arguing this should be settled, preferably last year, before the end of last year, instead of now, but at least it should be there now. But we never said from the Commission that then we are home safe. So in that sense, I agree with those who say this is just something that is common sense. And sometimes it is forgotten in the discussion that some years ago, in a very special situation, I don't go into details there now, but there we actually front-loaded. We front-loaded in order to create enough flexibility on Polish markets and others. And nobody questioned that. There was nobody saying, oh, don't interfere with the market. They said, it's of course. If the regulator can see that for some reason you have to sort of take care of how much you're auctioning at a certain time, you can do that. I agree with Matthias that it should not be something you do lightly. And that is why it's fine with me to say it's under extraordinary circumstances, obviously. But I have to say to those who argue that now it's just reflecting the crisis, that's not actually just reflecting the crisis. Because there is a special way it's designed here that makes it possible to buy the very cheap allowances now, to put them in the bank, so to speak, and have them for later. So in the normal market-based system, when you are out of the crisis and demand would increase, then also the prices would increase. But that is what we could foresee. That is not likely to happen here, because people can put them in the bank. And I noticed very much that we heard from the chemical industry here, that you said that 4 years from now, we might not need the allowances. That was sort of an indirectly acknowledgement that there might be too many allowances in total in the system. And to me, it's just a no-brainer to try to correct that. I heard what was said about don't change, we are in a crisis, and also these remarks, maybe the politicians didn't discover we were in a crisis. Yes, but politicians, including those of us who are working in the European Commission, we have one very, very, very big concern right now. That is that we might come out of the crisis. We might see slow growth rates taking up in Europe. but we are anxious that we might not get the innovation we need in Europe, and we might not get the jobs that we need in Europe. And that is why when we are identifying where is the growth potential in Europe and the innovation potential and the export potential, then it's very much also in these sectors: renewables, energy efficiency, waste treatment, ICT, and health. These sectors came out in the analysis of the economic services of the Commission as the sectors that were able to create net job increase this side of 2020 in Europe. And that is one reason why it's not to ignore the economic circumstances, it's actually to take the economic circumstances seriously, that we try and say, this is why we should take care now not to lose our front-runner position in some technologies and some sectors where up till now we have actually been doing quite a good job. And even during the crisis, we have been able to create 600,000 new jobs in these areas in Europe. I wonder how many other sectors you can say that about. So that is the reason behind. And very last point, we heard from the gentleman from the chemical industry about competitiveness and the wish to have low energy prices. I, of course, understand that that would be attractive. But I have two things to say to that. First, we can fancy about low shale gas prices like in the US. But anyone who knows anything about this market would warn us and say this is not going to happen the same way in Europe. Don't think that it's the same. And it is also, as we heard here, we still have a climate issue that we want to address in Europe. And wouldn't it be ironic when now China and others in the US, they are starting to realize that they haven't been doing enough there, then we start to get afraid of our own shadow. And as much as cheap energy is attractive for competitiveness in the short term, I understand that. As per definition, you want as low cost as possible. When World Economic Forum, just prior to Davos, starting tomorrow, published their annual competitiveness index, if you look at who is top 10, who is top 15, who is top 20, I'm sorry, it's not the countries with the cheapest energy. It is not. It's those who are good at innovation. It's those with skilled workers. It's those with innovative workers who can take initiatives themselves. It is those who are best to bring new products to the markets faster, and so on and so forth. So I do not say it's not important, but I say it's dangerous in Europe if we now tend to believe, just give us cheap energy, then we are home safe competitiveness, because we are not going to be as cheap on our energy side as due to the shale gas thing they are right now in Europe, in the US. Yes, if we import all their cheap coal, but then you also have to admit that then we have to give up our climate targets. So, I mean, there are some trade-offs here. And somehow also industry cannot continue to say they are in favor of Europe doing its share and doing its job in climate, but please give us the cheapest possible energy. Because we cannot just both lower wages, as we are doing now in Europe, making the reforms, and also just say, and by the way, the taxes and prices and whatever we have on energy will also have to come down. In the end, I think our citizens would start to protest, because there is a limit as to how far we can take the different cuts. So we have to have balance here. And if I should choose, should we lower our taxation on labor, or should we lower energy prices? Then I think I would go for lower taxation on labor, because that is where our biggest competitive issue is.
Maybe Mr. Garcia, you could respond to some of that.
Thank
Yeah,
you,
go
Dave. Quite a couple of things on those remarks here. Back to your comment, Tom, on the what is driving the U.S. economy nowadays. I don't think this is a 25% share on CO2 market, primarily led by the California state. This is shale gas. I mean, this is gas at large, and the conventional and non-conventional sources of gas have really created a change in the game over there. And when we think of game changing in Europe, I agree, Ms. Hedegaard, that the shale gas wouldn't necessarily work the same way in Europe. But at this point in time, we don't know what we don't know. So just let the innovation go and let's dig holes in the ground and look into, 8 feet under what is behind that. And if that materializes well, maybe we should be lucky enough to have a new era for gas in, by the way, not tomorrow, but in 10 years. But that's about the time it's going to take anyhow, from the first well dug here until the full production. By the way, there are only 5 or so wells in Europe as we speak. That's the position the U.S. market on shale gas used to have 20 years ago. So we are just lagging 20 years behind anyhow. So that's the position. And when I've heard you saying that we are striving for and seeking for an innovative Europe, the U.S. has actually shown us the way, the path forward in developing this technology of shale gas that we try to have in Europe. I mean, the so-called fracking things here. But that's a real innovative technology that they have taken from many mistakes years ago, and which is now delivering for the best of their economy. The energy cost. I said this is really what matters to us. That's not the only one competitiveness factor. We would agree on that as well. However, would that be a paradox to say that since we have been hit once by the crisis, and over a long period in time, we should be hit twice by just increasing the price of electricity, for instance? Because, by the way, we are taking quite a lot of electricity. What are the winners in this ball game as we speak? Winners of backloading? Are they the energy-intensive industry that I'm speaking on behalf of here, or the energy producers, or those who really have interest in high CO2 costs and companies having interest in gas, in LNGs, for instance, interest in nuclear, energy producers at large, that have the possibility to pass this cost on to the final end user. The industry is part of it, but also the European population is part of it. So another paradox. How would we justify that as policymakers? And I'm not a politician here, but I'm an Israelis. But how would you justify that? That in the coming few years, the population will have to pay a higher electricity bill just for the sake of developing a new source of renewable energy for Europe. And final point, and I will come back to that in the round of the debate here. Renewable energy development, wind, solar, do they actually need a price signal? Do they need the ETS money to develop? No. One example is the year 2011, a record year for investment in the wind technology in Europe and also in the US, so say worldwide, And I take that from the Wind Energy Association, not from CEFIC. Guess what? A record low year as far as CO2 price was concerned. So what is the logic behind? I'm afraid that we have been so quick in developing those regulations, I name it renewables, energy efficiency. We have done such a good job regulating that they are now overlapping themselves.
I want to get a quick reaction from the two legislators here, but if you could keep it fairly short, because I want to make sure we have time to open up questions for the audience. Maybe you could go first.
Thank you very briefly, since I'm a diplomat reading passionately Commission's communication, I would want to recall something from a different angle from the Commission, that is, I believe, from Commissioner Tajani, a communication on a stronger European industry for growth and economic recovery, which recalls that the affordable and reliable access to energy and raw materials are becoming increasingly important, as they account for a significant part of the costs in many industries, while the European industries, on the average, facing higher prices of energy than industries in other developed economies such as the US, Canada, Mexico, and Korea. And this price gap has increased over the last decade. That's what is being discussed by the different formations of the Council. And I'm blessed with participating in many of them. And then on the low energy prices, I mean, that is a political motto for my Prime Minister, and it will remain this way. Of course, we have to realize that there is more to low energy prices than we can discuss in this format. It's also about the completion of the internal market. It's about the diversification of routes and sources of supply. And of course, it's shale gas, and I could speak passionately about it, but I don't unless I'm asked to. It's also a question of security of supply. And then final comment, I'm reading in the press, and I'm not the biggest expert on trade, that there are thoughts lingering about entering into discussions with the US on the free trade agreement. And frankly speaking, I wouldn't want to be faced with a serious competitor that will have a serious competitive advantage in all of the high intensive energy industries. So that's all from me, a comment from a diplomat and not a politician. Thank you.
Yeah, first of all, I have to reply to the Polish minister with a tweet. If you want to fix the economy, then you need growth and innovation. And one instrument for growth and innovation is a strong ETS, and a fair ETS. And the title of this debate is Building a Bridge to a New Climate Deal. And there are different approaches. We had a good discussion in my office about the different situations in the European Union. The Polish view is a total another than the German view or the French view or something. And so we need a consens in the European Union. Energy policy is since December 2009 European policy. Only the energy mix is at the national state. I think it was a mistake. It was a mistake because the German Energiewende never will work if it's on the European level, if we change the things. And so one driver is the emission trading system, because there's a new trend that we are more and more coal-fired plants. But we need also an analysis about the traditional industries. I want to avoid a green economy because I don't like it. Sustainable economy, perhaps. We need a strong steel sector in the European Union. We need other strong sectors, aluminium, etc. Because if you want to install a wind turbine, you need steel or beton. And I don't want to buy it in China or somewhere else. So we have to take care. We need a really good analysis, and this takes time. And this is the reason why we need backloading to discuss this seriously. And with the new commission, they will propose, or the old commission will propose new instruments to fix the whole carbon market, and we need time, and we are buying time with backloading. It's the first step to a really fair way. The cost for the customers. In the first period of the emission trading system, the opportunity costs, Opportunitätskosten in German, they was in the price. They received all allowances for free, and the customer paid for it. So this is the reality. And if you want such a debate in the public, we can start it immediately about the pricing and the different prices in the different member states. We can start immediately the debate. I think it's perhaps it's the time to start it, because in the steel sector, different companies received hundreds of million windfall profits. We can debate. Yes, it's true. we can debate about these figures. In the end of the day, we need the citizen and we need the society. So we have to take care that the costs are not exploding, and that we are able to justify the things. And also the whole carbon leakage debate. If an operator for a mobile network is a carbon leakage company, it's really not so easy for me to justify it to my voters. And so we need a check about the energy incentive companies, and if it's necessary, and there are some companies in the aluminium sector and so on, we need a change, but also in another direction. And the cost is a very interesting debate. We can start it. Also fine for the election campaign.
Do you want to give, Tom, do you want to give a quick reaction, then we'll open it up to the audience?
Just a very good thing you were saying about shale gas and 10 years out and going and drilling holes in the ground, etc. As I think I alluded to, the challenges that face the global economy due to fossil fuels are very, very significant. And getting out from under the economic burden of fossil fuels is one of the great side benefits of essentially a low-carbon transition. And it's worth noting the IEA World Energy Outlook for 2012, in which they said very clearly that if our current energy system develops on the trajectory that it's currently set on, we will have locked in the necessary global or greenhouse gases to get us over the 2°C threshold for global warming by 2017. This is not a problem that's a million miles away. We're talking in 4 years' time. So to suggest that we should be building out a gas-based system for the next 10, 20, 30 years essentially is ignoring one key fact. There's also another very important study that's just been done by the Carbon Disclosure Project, in which they asked thousands of companies around the world what they thought the impact on their business of climate change would be. And 70% of their respondents said that they expected significant cost impacts of the impacts of climate change on their businesses, either that they were currently seeing those or they expected to see them in the next 3 or 4 years. And yet only about a third of them had any kind of mitigation strategy in place. So it's quite clear that even though people realise this is starting to hit their bottom line, as the Commissioner alluded to, we had 12 over $1 billion weather events, cost weather events, just in the US last year. There is vast amounts of money going on this right now, and all of those costs are just being discounted in this discussion. We need to start thinking about the impacts of climate change as actually outweighing many of the capital costs that will be involved in energy transition.